All right, there we go. Okay, good evening, everyone. Today is Monday, June 12th, 2023. This is the City of Fairway. I'd like to call our meeting to order. It is 6:31 p.m. There are no announcements this evening, so if you'll please stand for the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Our first item of business, I'd like to read a proclamation concerning Pride Month. I'd like to read it into the record. Whereas our nation was founded on the principle of equal rights for all people, and whereas everyone should be able to live without fear of prejudice, discrimination, violence, and hatred, and whereas discrimination in all forms is unjust, and the City of Fairway, Kansas strives to be a welcoming and inclusive community, and whereas June is recognized as LGBTQ Pride Month, and whereas the governing body of the City of Fairway, Kansas, on the 12th day of August 2019, declared it with resolution number 2019-8 to be the policy of the city to reject discrimination of any kind and to respect the inherent worth of every person. Now, therefore, I, Melanie Hepperly, Mayor of the City of Fairway, Kansas, do hereby proclaim June 2023 as Pride Month in the City of Fairway, and I urge all residents to respect and honor our diverse community. Dated this 12th day of June, 2023. Moving on with the agenda, our monthly reports of standing committees. Chief Chick is not here this evening for Consolidated Fire District Number 2, so we will let his report stand as submitted. Admin and Finance Committee, Nathan?
I will let the administration report stand. As at the committee meeting, we did not discuss any administrative items. As for the Finance Committee report, our cash balance is strong at just under $1.5 million. At the committee on the 31st of May, we discussed the draft of the 2024 citywide budget. That draft budget does include a flat mill levy rate, though we will be capturing the increased revenues and valuations, and it will be used to offset inflationary costs as well as capital projects. The other part of the 2024 draft budget that the Administration and Finance Committee is currently considering would be to increase the stormwater utility fee from $120 to $240 per household, and the reasoning for that is because we've recently completed the CCTV study of all of our stormwater infrastructure, and we have identified the Priority 1 projects and Priority 2 projects that need to be tackled, and currently the current stormwater utility revenues are used to pay off debt service related to stormwater. So this increase in the stormwater utility fee would be to pay for new capital projects going forward. The other thing I would just note right now is when the committee reviewed the draft budget, I had not included the cash balance in the general fund reserve fund. So when we look at that and incorporate that into the budget, as we said today, the transfers from the general fund to the capital improvement fund are closer to $1 million than the $700,000 that we discussed at the committee meeting. So, and as you all remember, we spend about $1 million on capital. So right now it looks like we may be able to fund our capital improvement program through 2025 with current revenue forecasts. With that, I'm happy to answer any questions.
Any questions for Nathan? Thank you for that update, Nathan. Police, Chief?
Thanks. I'm going to give a quick overview of last month. I feel like I say the same thing. We're busy. Someone goes to jail every day in Fairway now. Our level of activity, our activities that are listed there, we're up over 100 activities from last year. some of the calls that we had. I talked about it at the last meeting because of the timing of our meeting. We did, in fact, encounter some individuals vandalizing the bridge on Mission Road. We took those individuals into custody. We also had a commercial burglary at one of our restaurants. There was no loss reported. We're still investigating that, but nothing was, there was damage in entering the business, but nothing was taken. We encountered fentanyl again last month. We recovered a stolen U-Haul that was on Delmar in our city. And then the last thing that I kind of want to mention is this made me laugh. So it was the very last activity that we had in the month, which was there was a criminal deprivation of property, which means basically you loan something out and someone doesn't give it back to you. So someone loaned out their car and they didn't get it back from the individual they loaned the car to. And the person that had the car, I guess, loaned it to somebody else, and they were door dashing in the city with it, which is, I think, kind of funny, but we got the car back. But someone, I don't know who it was that didn't get their meal, but sorry. Anyway, I'm happy to answer any questions,
Any questions for the chief?
and I'll let the report stand.
All right, thank you, Chief. Public Works, Bill. Bill, how are you feeling? Are you recovering from your surgery?
I'm recovering, and if it's possible to be a little bit ahead of schedule, I am. I've already regained my almost full range of motion, and I get to go to physical therapy twice a week with Nurse Ratchet, so that helps. But other than that, yeah, I'm doing okay.
That's good news.
Nothing really new to report in Public Works, kind of rinse, lather, repeat for this time of year. Our CIP isn't going to get started for at least another month or so. We're getting the submittals in for that right now. I don't remember if I ever pointed out, we finally did get the crosswalk working at the Creamery. I'm sure everyone has noticed, but it's been fully functional for a couple of months now. Rick and I gave a presentation at the Heartland Council Alliance meeting on our tree ordinance protection, us in Prairie Village. Much larger turnout than I would have thought would have been there, but great information at that. But I'd be happy to answer any questions that anyone has, even though I haven't been in the office for a few days.
Any questions for Bill? There are none, Bill. Thank you very much.
You are welcome.
Parks and Rec, Bryce?
Thanks, Mayor.
How is your staff surviving?
Well, yeah, Vicki and Jackson have been working a lot of days in a row and have done a really good job. We've had some, the rain this weekend. I'm thinking about 50 people came to the pool in the last 3 days. But when it gets hot, we're pretty busy. So opening went well. Everything looks great. The new, I know everybody gets kind of PTSD when I say pool liner, but pool liner's gone. We don't have to think about it anymore. It's beautiful concrete that's painted, so it's doing great. I will kind of update you. So our numbers changed pretty quickly, and in the 12 days of June, our numbers have changed pretty dramatically as well. So on the pool membership, on your report, it'll say that we've only brought in about 90 grand, but we're already up to 105 now. In those 12 days, we picked up another 15 grand on memberships, but gate fees are close to 16 grand, and programming has exceeded its budget for the year at 61 grand, and swim team revenues are above as well. So we are geared up for another busy season at the pool already.
That's great news, Bryce. Any questions for Parks and Rec? I don't see any, Bryce.
Thanks.
Hang in there. Tell your staff thank you.
Yep, we'll do.
All right, next on the agenda is the monthly reports of the special committees. Tree Board, Nathan?
No report.
All right, our agenda next is public comment for the consent agenda items. I will read those into the record before I ask for public comment. A is to approve the minutes of the previous regular city council meeting. B is to approve claims and appropriations, ordinance number 1783 for May of 2023. And C is to approve the mayoral appointment of the city prosecutor. Are there any comments during public comment? Anyone here in the audience would like to say anything? Or Nathan, do we have anybody online?
If you would like to make a comment from Zoom, please use the raise hand feature now. I don't see any, Mayor. And I might just add for the consent agenda, just as an explanation, our current city prosecutor, for personal reasons, had to step down. So our prosecutor pro tem, the mayor and chief interviewed, and along with another applicant that had interviewed but then didn't make the interview. So I don't know if you want to say anything to the interview or anything like that.
Say anything what?
Say anything about the interview or John,
okay.
Josh, excuse me.
Yeah. Josh Allen is the individual that we has served as pro tem, and staff has been very happy with when he substitutes. And also the judge, Sekulas, really does like working with him too. The interview, I thought, Chief, went very, very well. He understands Fairway and what we're all about and how important the police department is to the operations of our city. And I think he learned some new things that he was very pleased to hear about your operation and how you approach it. Is there anything you want to add to that?
No, you covered it.
I covered it? Okay.
Yeah, we're happy to have him.
Yes, I would agree. We will be filling his position, subject to your approval this evening. We will fill the city prosecutor pro tem position. I would like to get his input and the judge's input for that individual. That's why that appointment's not on the agenda this evening.
Rich, I know you got the comments back from Joshua about the contract. Just to clarify with the council, our previous prosecutor was brought on as a part-time employee, so we processed payroll and did payroll processing, all that stuff. With Josh, he's going to remain an independent contractor. So Josh and Rich worked out the details of that contract. And so because it's well under the threshold, I'll go ahead and execute that. I've not done that yet.
Okay. All right. Since there is no public comment this evening, the consent agenda items are determined to be routine enough to be acted on in a single motion. However, this does not preclude discussion. If a council member requests, an item may be removed from the consent agenda for further consideration and a separate motion. Does anyone wish to remove an item for discussion? Okay. I will entertain a motion concerning the consent agenda.
Mayor, I move that we approve items A, B, and C of the consent agenda.
Second.
All right, it's been moved and seconded that we approve the consent agenda items A through C. All those in favor, aye. Aye. Opposed, no. Passes unanimously. We'll move on to new business. I will ask for public comment after each of the individual items, so that at that time, if anyone has comments or discussion or questions, we'll entertain those items then. Item A, consider ordinance 1784, an ordinance granting to Google Fiber Kansas, LLC, a contract franchise to construct, operate, and maintain communications service facilities in the public right-of-way of the city of Fairway, Kansas, and prescribing the terms thereof. Is that going to Rich or, oh, you were quick to do that. Rich?
Sure.
You're-
Rich Cook, City Attorney. So this was originally before the council in April, and we held it for a couple sessions because Google wanted to get its approval stamp on the document itself. The approval stamp is now on the document. The reason for this ordinance is the fact that Google Fiber has, as many of you probably know, ceased to provide video services and now is just providing internet services. And because of that, we need to redo the franchise. And so that is what this is. It extends it to 2020 or 2033. And there are 4 two-year renewal periods. And it's basically kind of the form of the franchise has been updated to reflect recent changes to the Kansas statutes on the franchise agreements, and so that's what this does. I'm happy to answer any questions.
Questions or discussion, council? All right, hearing none, I will open it to public comment. Is there anyone in the audience this evening or online that wishes to discuss this item? All right, I don't see any raised hands, so we will close public comment. And I'll entertain a motion concerning ordinance number 1784.
Mayor, I propose that we accept and approve ordinance 1784.
Second.
It's been moved and seconded that we approve ordinance 1784. All those in favor, aye. Aye. Opposed, no. Passes unanimously. All right, item B on the new agenda, consider building permit extension for 3904 Shawnee Mission Parkway, as submitted by Greg Risotto, authorized representative for Glen Rose Contracting, Inc. Nathan?
Mayor, I'll be brief on this. The extension is because there were some, as I understand it, there were some delays on getting materials. So, with that, the staff has reviewed and recommends approval.
Okay.
And as with all renewals that come before the council, it's just understood that the extension includes a permit fee of half the original cost. That will be paid into the general fund.
Okay. Any questions or discussion by the council?
I had a question there.
Mm-hmm. Jenna?
It looked like the work would be done before the 6 months, but is it because we just give it out in 6-month increments?
The
Is that how it works?
code says that it's up to a 6-month extension. The council can go less than that, but it doesn't prorate the fee. It's all the same.
Okay. But awesome. Thank you.
Any other questions? Okay, we'll open it for public comment. Would you like to address? Okay. Okay.
And could we get your name just for the... Your, okay. Okay, great. Thank you.
Is there... Hank, wait till we vote. You want to make sure you got it before you leave. We're quick, but we're not quite that quick. Is there anyone online who would like to comment, in public comment? I don't see any raised hands, so we will proceed to a vote. Is there a motion?
Mayor, I move that we approve item B on new business, which is the extension of the building permit for 3904 Shawnee Mission Parkway.
Second.
All right, it's been moved and seconded that we extend the building permit for 3904 Shawnee Mission Parkway as submitted. All those in favor, aye. Aye. Opposed, no. Passes unanimously. So long. Thank you for coming.
I'm sorry, I missed who motioned and seconded. Okay.
It was John Allen. All right, the last item on the on new business is presentation of the 2022 financial audit.
Yes, and I've got to send it. Jim did not get the link. He just sent me an email, so let
Okay.
me
We'll
send it.
pause for a minute.
Nathan, I don't know if you realize we have 839 unread resumes.
I know. Yeah.
They're all from you.
Good evening, Jim. Can you unmute yourself? And we'd like to see your face, too.
Oh,
We only see it once a year.
well, can you hear me all right, Mayor?
I can hear you.
Okay, just can't see me.
Yeah.
I'm not sure why. I think the last time, my camera's giving me a fit or. Hey, there we
you
go.
are. Welcome to our meeting.
Thank you. Glad to be here. So I just take off and do my thing?
You can do your thing.
All right.
We're ready for you.
Well, good. I think I am ready too. I'll give my standard opening, which is just a brief description of the audit process to kind of emphasize that, we look at the city, look at the current year activity, understand, based on our previous knowledge of it and so forth, and then determine, our appropriate audit tests and so forth, and look at those areas that might deserve a little more attention, and maybe in some cases there's areas that don't deserve, don't need as much attention and so forth. But again, we design our tests and procedures accordingly to really go after those areas that need the most. And maybe just the most important point is an audit is not 100% verification, and probably many of you know that and have heard me say it before, but I think it's always worth repeating. So, the document, that leads us into from the audit side. The key document in this is our auditor's report, and the first few pages 1 and 2, and that I'll just mention, we refer to it as an unmodified opinion, but it is also it's our highest level of assurance, saying that the financial statements as you see them have been audited by us, and we have deemed them to be materially correct and so forth. So maybe the key terms are highest level of assurance. So, and I don't know how much detail I'll try and do a kind of a brief walkthrough of the statements themselves. Those of you that are familiar with governmental statements understand that they are very different. Particularly, there are two sets of financial statements. The first page is, I think it's page 10. They are called the government-wide statements, and they are on a full accrual-based accounting perspective, just like a business would do. Our standard-setting body seems to be moving more and more that way every year, so we'll see that continue to grow. And the primary difference there is that all your long-term assets, like your capital equipment, and that includes trucks and police cars and roads and bridges and so forth, and then the bond that has, there we go, and then the debt that acquired those, your long-term debt. So they're on the You saw the capital assets, now the liabilities here. There's long-term it's really a long-term perspective. It will include the capital assets, which are long-term. It will include the long-term liabilities, which is primarily your GO bonds, capital leases that are, I think they mature in 2024, the capital leases, as well as some of the other longer-term liabilities, such as the pension liability. It's a big number this year. I will touch on that a little bit. OPEB is an acronym for other post-employment benefits. That's not to say a hard one to explain, but maybe to get our minds around. But that $219,000 is because you allow your employees to participate in your health care plan, and CAPERS also has a health and death benefit plan that all CAPERS enrollees participate in. Because everybody participates, the concept is that the retirees or other participants are really getting somewhat of a subsidy from from the city by the premium levels they pay, because they do not pay the age-based rate. So that's considered, there's kind of a long-term or almost a pension cost effect in there, and that's what our standard setting bodies said we must do, which is why they now appear on your financial statements. Key thing is the pension. I'll just touch on that momentarily. I've also said that before, but this is an actuarial determined amount based on your CAPERS and KP&F of the future liability that the city will have at some point, based on, again, actuarial projections and assumptions. So while the amount looks pretty significant, and yours went up almost $1 million this year, but so did everybody else's. And the biggest thing affecting that is, of course, as we probably all know from our retirement accounts, the market effect on the plan investments. The market's way down on the investments, so that conversely throws the liability, increases the liability as well. But I also say that you don't, this is something that you'll never write a check for. It will be paid over time through the effects of the current CAPERS and KP&F contributions and retiree benefits and so forth. But it did get to such a large number, I did also want to touch on it again this year. The one, out of our almost 60 pages, I believe, the ones that I really always like to point out will precede this on page 3, and that is the management's discussion and analysis. And here's something that I think our standard setting body really had a good idea. This is written by Joe, and I'll work this in now. Joe, you did a great job on this. The MD&A went very, very well, and you put it together quite well. So thank you. But what this does, it does a lot of things really in about 5 or 6 pages. Financial highlights, that's actually, to tell the readers, where, what was really different this year. And, the first 2 bullet points tells you, explains where you ended up in your net position is the accrual-based kind of fund balance. Then you also have the general, the governmental fund balances, which are really more of a budget basis, and I will get to that momentarily. But they've all increased. The city really had a fairly good year, if you want to call it that, and explaining a little bit why. Some of the primary differences from the prior year, that sales taxes continue to be strong. That's noted almost every other meeting by Nathan, and talking about how well it's done compared to budget and so forth. Some of that increase was offset last year. We had the Lion Park donations and, of course, all the costs that were associated with it. So that did have some impact on the fund balances. The general fund, I know, is probably tended to be the most, not say watched, but it's the most critical one. And while its fund balance maybe did not increase as much as it somewhat has in the past, it still increased, but also you were able to use that ARPA money to cover some public safety costs in the grant fund, which also allowed a significant increase in the transfers to the capital project fund. And the city's done a good job of building that capital project fund up, and the combination of the ARPA funds allowed for that additional transfer that really, while it pushed down the general fund a little bit, it also benefited from the ARPA funds. But it essentially ended up in the capital project fund, which really is a good management tool for the city to use. So as you know, as you go through, you can see the overview of the financial statements. I may sort of leave, I've touched on these a little bit, why you have government-wide and the full accrual is what those, representing all the assets and liabilities, regardless of when you will, pay for them. And then it touches on the fund financial statements, which is what you see every day from Miller Management. And it's kind of more, I call it more of a budgetary perspective. It does, it's interesting on those statements, when you issue bonds, it's like income. When you purchase an asset, it's like an expenditure. For the full accrual ones, well, those get capitalized, assets get capitalized and appreciated, bonds become your liabilities. So this will walk you through. There's some tables in here. Here's one area where you can actually see comparative information from the current year compared to the prior year. That first table is the government-wide and showing, just these are it's very condensed, and that's what the standard setting body requests. But you can kind of see where your current other assets, those will be very, very similar to what you see in your fund-based statements. We bring in the capital assets of 17 million. Outflows and inflows are mostly pension and related amounts. Long-term liabilities, as I touched on a few minutes ago, were those are your GO bonds, leases, pension liability, the post-employment liability, and so forth. And those deferred inflows, below those are also primarily pension related. So then it does break this net position down into components. Too much like with your fund balance, the capital assets is really just the total capital assets less the debt associated with purchasing them. The restricted is going to be for mostly the special revenue funds for unspent special highway, debt service, and the like. And then the unrestricted is kind of comparable to your unrestricted fund balances. So there's a little full accrual presentation. I think as we continue through here, here's the income and expense side of the full accrual-based statements. These are classified in these particular categories, what they call program revenues. Those are going to be certain grants, charges for services. The big one there is like the pool, for example, and some of your licenses and permits. Grants and contributions, again, that jumped way up. Of course, that's got got $600,000 of ARPA funds in it. The capital grants, you can see that went way down, and what that represents is most of that $642,000 from 2021 was the Lion Park donations. And of course, they went away this year. We didn't have many capital grants. Capital grants are to buy capital assets, by the way. And now we'll see some familiar terminology, property taxes, sales taxes, franchise, and so forth. The expenses by your departments, more or less, functions, they will change a little bit, and most of them are pretty comparable to the fund-based ones. The one I always want to mention, maybe Bill would appreciate this, the public works, why that looks so large compared to the fund statements is the fact that when we depreciate the assets, we have to allocate the usage of those assets to a department, and public works is the default department for roads, streets, and bridges, which is the vast majority of your capital assets. So there's a few discussion, right below the table. There's some of Joe's analysis here and explaining, I guess, to the readers why some of the changes transpired. We touched on the sales and property taxes as a common theme. They both went up a little bit. The mixture between debt service and general switched, but otherwise there was an increase in property and particularly sales taxes, expenses. Talked about the human resource costs, just increased costs there. And most of the capital projects this year with street maintenance, they didn't qualify to be capitalized, so they become an expenditure just like they are in the general fund. They put together a nice little pie chart here kind of showing where your revenues come from. I think that's informative, and these are nice. This is very readable and easier for the users to see.
Jim, if I can just interject for a second here, just as a reference, when we do the budget for 2020, for 2022 or 2023, we budgeted property tax to be about 40 to 42% of our revenue. So this is the actuals here, where you can see sales tax really jumped in and brought in more revenue than what we budgeted in sales tax. So that pie chart gets balanced out because of that increase in sales tax revenue. It drops the overall percentage of actual revenues from property taxes. So I think this is a good chart to point out. I know Joe has always advocated for a third in terms of revenue, and while we don't budget that because we can't necessarily budget real bullish on sales tax, the end result, the actual, comes in ideally at about a third.
Well, that's good to point out, and it's really very easy to see here in that chart too. You hit it almost spot on there.
And this makes our revenues very diverse compared to some of our neighboring cities, where sometimes there's over an 80% reliance on sales tax.
Right.
So this gives us we're spread out in terms of our revenue sources.
Another positive thing for Fairway too. That's that reliance on the sales taxes could be a little difficult, as you know. So. All right. Anything? Well, I said beyond. We're here in the. There's some. Oh, there's the expense chart. You can kind of see what's transpiring there. And this kind of comes back. Public Works. We can kind of see again. While that number spikes, Public Works doesn't have that large proportion of the general fund budget, but on our full accrual-based statements, because of the effect of the depreciation they get allocated, it really does kind of skew that from that perspective. So I tend to like to point those kind of things out, so somebody doesn't get misrepresented. It's perfectly normal and very common. Your fellow cities also depict about virtually the same thing. When you look at, well, how come Public Works was only $100 on the general fund budget, but it's $500 on this full accrual method? The difference is essentially depreciation. So the funds, again, some of this will sound very familiar, because a lot of the things that affect the full accrual-based statements also affect the fund statements, such as the sales tax increases and the lower capital outlay expenditures. Most of the funds look very healthy to me. We have you can see the capital project. We discussed that transfer again. The federal grant funds, same thing. That it's now gone, but we're able to use that ARPA funds to really provide the city some flexibility to do some other things, and it appears to have worked out really well. So the rest of the MD&A is discussing things such as capital assets. It provides a table of the types, the detail of the capital assets by type there, where those are low, and these are all net of depreciation. These are the net amounts, so what's left to depreciate. You can see, obviously, infrastructure is a big portion of it, as are buildings. Debt's always positive. Have another bond issue paid off. The benefit the cities receive from the refundings are mentioned in there. And Mayor, I know that next to the last paragraph is kind of one of your favorites, isn't it?
Yes, it is, JM.
And this looks even better than it did last year. So I think just another testament. In fact, I was going to have it up here, but what that percentage was last year, but I can tell you it's lower, which means it's trending in the right direction. So And there's a little table of your bonds, and you see 2012 got retired, so the city's debt position is improving every year. A little discussion in here. Looking there, this is where the very last paragraph you can start looking forward a little bit and mention what's transpired. The areas that seem to keep breaking new records, building permits, and the pool, for example, and sound like that's not going to change. Now we're in the financial statement section. We've kind of covered a lot of this. I think we've looked at these 2 pages here. These are the full accrual. I think they're maybe worth taking a brief look at, but starting right here, the these are the fund-based statements. Again, will look very much like what you see every month that Miller Management prepares. And this is, again, more of a budgetary perspective, but it does reflect the kind of the key numbers for the city on a day-to-day basis. Cash, of course. Maybe the biggest thing to point out in here that might be somewhat different, we do this, well, we've changed as part of the audit, but property taxes, there's a $2.2 million receivable. The reason being is that under the accounting rules, the property taxes are really levied in 2022. So that, and under the accounting rules, they become a receivable. However, because they are essentially restricted for next year's use, if you look down in about the middle of the page in the liability section, we have this new thing, deferred inflow, but that's basically unearned revenue from that property tax, and lo and behold, it's the same amount. So it does kind of gross numbers up a little bit, but it does have it is as per the accounting requirements. The rest of them are pretty straightforward. You've got your cash and a few other receivables for sales tax. By the way, the rule there is you record a receivable in the period in which the merchant collects it. So you have a 2-month lag from the time it's collected by the merchant to the time the state distributes it to you. So sales taxes have really comprise what you collected in January and February of 2023 because they were received by the merchant. The merchant really collected them in November and December. So rest, I think, pretty straightforward. Accounts payable, just bills we've incurred that we haven't paid yet. Accrued payroll, because your payroll doesn't cut off cleanly at the end of the year. That stub period from the last payroll in December to December 31st has to be recorded. And then the lower section primarily is the fund balances. And here's where you can kind of see where some of those restricted amounts we looked at earlier on that other form of reporting, the net position, here it is in a fund balance form, and the areas in which they're restricted for. Debt service is the obvious one. It's restricted for debt service. And then some of the capital outlay, we have these terms called committed and assigned. In other words, restricted requires an external restriction. Committed and assigned are internal designations, so to speak. You can't restrict your own resources. Only outsiders can, legislation and or resource providers. But internally, you can commit or assign. Good examples, the Equipment Reserve Fund, it's committed because of formal action of the governing body. Capital projects is accumulation of annual transfers. That amount's assigned to be used for capital projects. The one's a little different, subsequent years expenditures, the $484,000. Again, effectively that's the amount you carried forward to next year's budget. That effectively creates an assignment of the use of that fund balance carried forward because of basically the balanced budget for Kansas purposes. You theoretically have to budget all your carry forward plus your current year resources. So there's your governmental balance sheet. I think the next page, this schedule, I won't spend too much time other than it is trying to this is the bridge from the governmental funds to that full accrual government-wide basis. You start with fund balances and see a lot of these things I've touched on already. The capital assets of $17 million go on the full accrual balance sheet, so to speak. some of these other pieces you can see down below, excuse me, like all the liabilities and the outflows, these numbers then match up with what's on the government-wide statement of net position, i.e. the balance sheet. The next one's probably, will be more important, so to speak, is now here's your revenues and expenditures by fund, kind of where, like, by pretty, it's fairly well broken down. It shows the key areas where the revenues came from. Here's a good chance to point out, I was talking about how Public Works is so different here. Well, 800,000 here, and I think it was like $1.6 million or something like that over on the full accrual due to the depreciation. So now we can see some of the things I talked about in number form. So, and here's the big difference was all those transfers. We saw the big transfer out of the general fund. So little assistance from ARPA. This schedule, this is another kind of a crosswalk or reconciliation from the fund balance changes to the full accrual revenues and expenses. There, depreciation, you can see that big minus 822,000. That's not, you don't record that in your monthly fund-based books. You only do that for external reporting like we're talking about today. So. And beyond that, I'm not sure there's really, I don't want to, so the notes are probably self-explanatory. That's what will follow us here. It does provide a lot of detail, it almost like a little bit of a primer for governmental accounting too, and how things are accounted and recorded on the different measures, the government-wide and the fund-based statements. This all will look familiar from the MD&A. While it's very condensed, here's the details. And once you get past the accounting policies, there'll be some tables, showing much more detail of some of the more significant accounts you have, and on both bases of accounting. There's your capital asset activity. You can see how it changes. Here's your long-term liabilities activity and how it changed. And here's the details of the GO bonds, as far as what's outstanding and when they're due. Leases, debt margin's a good number. Here we get into the more esoteric things. Here's the pension. This thing used to be a quarter of a page, and now it's about 5, but it does explain a lot about background to capers, contribution requirements, and so forth. A lot of actuarial details that probably aren't worth addressing here tonight, but they're there if you want to see them, so to speak. I don't think there's a whole lot, not much else to point out in the notes. I think the last page, the city's been busy here, so to speak. You've got a CID getting ready to come, basically it started, come online. The TIF, that won't come online for a while, but when you had a development agreement go into effect in 2022, we just need to provide some brief background about it. And now here's some budgetary detail schedules that are required to be presented. These tables here are pension related data that's required to be presented. Probably the ones that are of more meaning. Here's combining statements. In our world, you saw certain of your larger funds, more prominent funds previously. The way the financial reporting structure is for the smaller funds that don't meet a numeric threshold, they all get combined in the back of the report here on this schedule, and they get brought forward in total to the main schedules. Now we're inching our way down through all the budgetary comparisons, and there's not much to say here. The budgets were all favorable, so nothing to disclose there. And I think we're done. You do have one more document from us. We call this our required communication to the governing body, or that's the format and presentation of it is standardized virtually everybody's will look the same. It's covering various points. Generally in there, if we had any issues, we would report those there, and which we did not, so I'm happy to report that. And otherwise, you can see the adjusting entries you make as part of the audit. But primarily those are from what we've agreed to do to convert your budgetary-based books to the fund, the generally accepted accounting principles basis. So adjusting receivables and the like. So did not have too many journal entries this year. A few retainages and things like that. But for those of you that like to peruse those, and any of the accountants or former accountants in this might want to see that, but otherwise they're available and they're required to be attached to that document as well. So, well, with that, I think I will kind of end my comments here and allow anybody to pose any questions to me, and I'll do my best to answer those for you.
Okay. Any questions for Jim concerning the audit? I trust, Jim, that the cooperation of the staff was stellar, as I would be surprised if it was not. But
I would too, and it was. This is a very cooperative effort, and it takes obviously our time and work, but it also takes a lot of effort by the staff to assemble what's needed to be able to perform the audit. And that's kind of my closing comments are always is to thank everybody. I know it's an imposition to their daily routine, but everybody jumped in and took care of what we needed in a timely fashion, and we always appreciate it. That really makes everybody's job a lot easier in that regard. And we don't encounter that very often, but unfortunately it does occur too. So, but again, everybody was very, very helpful, and it's much appreciated. And again, Joe, good job on the MD&A. So I want to thank you again for that too. That makes everything flow smoothly as well. So anyway, it all went well. It went very good. So.
Well, there are no questions, Jim. So I would
Okay.
like to thank you so much for performing this audit. I know it was tough this year. Our condolences in the passing of your father.
Well, thank you.
During this time.
That nobody needs that any time, but
No.
The timing here wasn't very good either. But we got through it all right, and I appreciate everybody being understanding too. So
Yes, no problem. But thank you. And I
Okay.
also want to say thank you to Joe. He enjoys doing the MD&A, but I get that. And thank
It's
you
in our
so
blood.
much. Yeah, thank you so
Just
much,
like root
Joe,
canal. I just love it.
for your expertise. And thank you to Nathan, who managed this entire process. And I'm sure Nathan is the one that put all the charts together, right? Mm-hmm. Yeah. So thank you for that. That often is very helpful when you're
Right.
not a financial an accountant.
Well,
Okay.
I even found it informative Nathan's comments about the budgetary budgeting in thirds, and how it's amazing how the charts came out 32 and 33%. So
Mayor, we do need to have a motion to formally accept the audit from the council. And Jim, if you can update the final draft and get it to me so I can get it to Gilmore and Bell first thing tomorrow, that would be fantastic.
oh, okay, all right,
They need it for their reporting by the end of the month.
okay, yeah, there shouldn't be any issue in getting that out tomorrow, Nathan. So
Okay, thank you.
Okay. Is there a motion?
Mayor, first of all, I think we need a second opinion. Jim, I'm only kidding. I move that we approve the 2022 audit report.
Second.
All right, it's been moved and seconded that we approve the 2022 audit as presented to us this evening. And it's been seconded. All those in favor, aye. Aye. Opposed, no. Passes unanimously.
well, good.
Thank you, Jim. Another
Well,
successful
again, it's always
year.
my pleasure too. I enjoy working with your staff and working in the city, and about as much as anybody. So I'm always happy to be able to continue to do this as long as I can. So anyway, well, thank you very much, and appreciate your time
Thank you. Have a great
All right.
evening.
too. Good night.
All right, next on the agenda is the governing body comment section. During this time, members of the governing body will be given the opportunity to speak about matters related to the city. No formal action will be taken during this time. Are there any issues to be, or questions or comments? Information to be passed to the council? All right, we'll close this section of the agenda, and I will open the floor for public comment for items not listed on the agenda. I don't see any raised hands, so we will close the public comment, and I will entertain a motion for adjournment.
So moved.
Thank you. We are adjourned.